Yeah, I think it looks
All right.
fun.
Okay, good. Yeah. So for Christmas,
And that's how we'll start the episode. Dave goes, "Does this look okay?"
okay.
Hell yeah. So what's going on, Mr. Townsend? Welcome to another episode of That Floats. It's been a while. It's been kind of a crazy last few months, hasn't it?
Yeah, I mean, it's there's not a whole lot of business going on for anybody, so we've been just sitting around twiddling our thumbs, just kind of trying to find a deal here and there. They're hard to come by.
I did write down on my notes here volume,
Yes.
and it's insanity.
Yeah, it's crazy how much the increase has happened, especially with the real large market lenders and the refis coming through some of our large agents, and
That's for sure.
even at the local level. I mean, some lenders are just like, we don't want the refi business. It's too much. They've throttled it back. I'm like, are you kidding me?
Yeah, it's been wild. I mean, we have a central production department that handles high volume refinance customers. And I've been telling them for, I don't know, a year and a half now, this isn't going to last forever. Let's take it in and have fun with it. And then one day we'll look back and say, remember when we were crazy busy with refis? And
Yep.
like, you've been lying to us. Some of them have only been with us for the entire refi boom. So they've never seen like coming in on a Monday saying, huh.
Yeah. They don't know what the cycle is.
The cycle isn't like this. It's like, eventually it should be, 18 months with some kind of a measurable something in there, or predictable, but I don't know.
Yeah. And that's the thing too with this industry. I mean, everybody's so busy right now.
Yeah.
And with COVID, I mean, there's kind of a survivor's guilt with a lot of the people in our industry and in real estate, because everybody's having their best years and they're doing great. But then there's other industries like restaurant and hospitality that are suffering. And it's kind of like, yeah, we're just kind of just keep quiet and do what we do.
So you tell your restaurant friends, like, I mean, it's busy. I mean, we could always do more, but we're happy that we've got a few orders to knock out.
Exactly. There's just not enough houses on the market. The inventory is hurting right now, and
right. Yeah,
that's what I'm interested in seeing. Is that I was having a discussion yesterday with an agent about. She was concerned about prices, like like the bubble that we saw before. But the bubble that we saw before was not really a supply and demand. It was more. It had to do more with the easy access to credit that inflated prices, because people didn't care what they spent because they could just buy it.
Yeah.
And now it's scarcity that is driving up prices, because you can't get lumber in fast enough and you can't get raw materials. And houses are getting 10 offers in minutes.
Yeah. So that's the issue right now for me, is that we're off to, I mean, it's end of February of 2021. We're off to the best start we've ever had in the first 2 months of any year. Any day now, usually, well, I shouldn't say that, any week now, the realtors join in on the fun, because, upper Midwest, it's cold in January and February. Usually a lot of listings start happening now. Come March is one of our biggest order count months of the year, believe it or not, for realtor orders.
Yep.
And there's nothing listed for sale now. Inventory is low. And I'm saying that 2021 could be better than 2020 for a lot of us. Believe it or not, I never thought we'd have another 2020, but 2021 is coming out swinging. The only problem is, I don't know when the realtors are going to come join the fun, because I don't see listings. All the realtor buddies I talk to are all saying, it's a delay, the weather, and they're coming, but I haven't seen any. So,
I definitely think the weather is you're going to see a blip. There's going to be just this little recovery, because think about it, Texas, Texas, you're now in the state of Texas. The last week, nobody was buying houses. I mean, they were just trying to keep houses warm at that point. There is no cycle in Texas and Florida. It's just constant purchase. Where we live, in Missouri, we hit our record -8 that was a record in Columbia, -8 last week. We had a pipe break the next day. Super. So, it was just like not a whole lot of stuff going on. I'm starting to see some signs, though. I took a walk this morning with the dog, And there was a house that I walk by all the time. It had a for sale sign in front. I'm like, oh, that's popping up, and it's in a range that is a little more on the upper end of things. So we're actually seeing some higher end houses moving, which is, before a lot of you're seeing the starter homes and that up to $250,000-$300,000 range just flying, and that you can't keep those in stock. They're just, and gentrification of other areas driving up prices. But the problem is, if you sell a house, then you got to buy a house.
That's right.
And so unless people are moving, but I think with when all this, when we have the COVID recovery, the true recovery, the amount of capital that's going to be put into the market is going to be insane.
Yeah, I mean, I'm looking at. I agree with everything you just said. The inventory thing does scare me right now, just because being an Upper Midwest guy, end of February, I usually see realtors doing blitzes on listings, and then I see them, pile up. The apps I use to just kind of keep track of homes that in certain areas, just to kind of give me an idea of what's happening out there.
Yep.
I don't see them. And I just think there's a delay. Hopefully it's just a delay and we'll catch up, because I think 2021 could be bigger than 2020 at this pace. And if
our budget
join in on the fun, then, we might have to temper down our excitement here a little bit.
I can only speak for our company, but I know our budget for 2021 will be roughly 130% of 2020 is what we're budgeting for growth. So it's going to be, but we're also in a growth mode as a company too. We're entering new markets. And so that's, if you're a mature company that is not growing, there could be leveling out in 2021, just because you'll catch back up with the regular cycle of purchases and refis if they do, level out. But there's still tens of millions of people that haven't refied yet.
Yeah. Yeah. I'm aware of that. I've seen some of my lender buddies have said that they are just finishing up people that have applied in October and November, that they've told these customers, like, we'll get to you. We're going to lock you in. It's a long lock period, but you don't have anything to worry about. I'm like, how long are locks now? I thought they were used to be 45 days was like a miracle, but I guess it's a little different now. So yeah, I still think there's a lot to do. So one of my customers here in Milwaukee said that he hasn't even started making any calls to the people that he knows should refinance, because he's too busy handling people that are proactively calling in. So I think a lot of pent up refi demand. I don't see really interest rates moving. I mean, the 10-year bonds going up a little bit, but I don't see any major changes. It's not like the 30 years going to 6.
No,
there are a few blips here and there isn't going to hurt us on the title end here. So
if rates, if you can get a 30-year mortgage at 4.5 or less, that's cheap.
Yeah,
I mean, that's still cheap, to purchase a house. And
so what about staffing on your end? I mean, you're an underwriter, I'm an agent, so I do all the work, and you.
Yes.
What about staffing for you? Because our staffing needs are probably a lot different, but nonetheless, the volume that we see on the front lines has to translate into some more administrative service side that you've got to perform on your end. You don't have direct offices to deal with, right?
No, we don't, but we do.
You still have to administer all the policies and premiums and claims. So I assume that you've got some pressure on hiring as well. It's a nightmare.
We just added another person in agency services that start. She's coming on board. We just hired another someone in accounting. We're hiring sales reps because we want more market share. But one thing we are doing more of is production for our agents behind the scenes, and so that is something
the Florida Texas model, where it does a little bit of that for them.
Florida, Texas, but also national refi business. Where using our real search decision engine.
I saw your article in the title news or title report on your real search thing. That seemed cool. We did a whole podcast on that, didn't we?
We did. Yeah.
That was before it launched, when you were under the what was that? Like, you were in a shelter at a park or something. And
yes, I was outside at the park, and then the guy just happened to sit right across from me when I was doing the podcast.
So that's how you debuted your new brilliant product to the world, as some stranger in a park bench.
Exactly, but that's a production thing. We're running 15. Actually, hold on. That was we're now 1,000 orders a day through that system. I mean, that's insane how much. And it's, um, but that's something that our agents use. It's a tool that the underwriters more and more are providing the means of production. The traditional Florida model has expanded into other states, but also it helps agents scale, because if they're doing national business, they need a national provider. So most underwriters have systems like that, or divisions in place that do procurement for agents, and that's where we're staffing up right now a lot. Hiring examiners, as you know, is hard to do. They don't grow on trees.
Yeah. So while you're doing,
and helping,
yeah, you lagged out a little bit on that one, but what we got everything you were saying. So while you don't have direct ops, you sort of kind of do, because you're doing what a direct op or an agent would be doing in search, exam, underwriting, typing, producing, instead of for a direct customer back to your agents. So yeah, I'm familiar with your product. I've got something similar that I've worked on with Stuart and some of the Westcore folks. So they're really interesting, really interesting things, that algorithm-based search product. So it's kind of neat.
It's not algorithm. It's not algorithm.
I mean, but I mean, I'm just saying that there's an automated search.
It's automated searches. Exactly. Yeah. It's a decision engine. An algorithm doesn't really do a search. That just says, okay, based on our actual.
It's a decision, but it's a decision making. It's a set of formulas to help make a decision based on a set.
Exactly. Yeah. So it's rules. It's a lot of if-then statements.
But that's what we do in the field, right? We grab a stack of deeds, a stack of mortgages, taxes, and judgments, and we say, if this, then this. Yeah. If the chain goes from David to Craig to Sam, we're in good shape. Wow, where'd he come from? Algorithm broken. So your computers just kind of do some of that.
It augments the examiner and allows them to do more higher function stuff.
Yeah, that's cool.
So, because just because you get a automated search product like that doesn't mean there isn't something that has to be done. When we look at these, a spousal joiner might be required, but that's spelled out in that. So it allows the examiners to be more efficient, so that they don't have to go in and do all the curative. That's the basic stuff. It allows them to work more efficiently, which I think that's the future of our industry is efficiencies, finding it in tech. And as underwriters, we're doing more BPO, the business process outsourcing, for our agents. That's where they need typing. Underwriters can offer that. You need escrow recon service. We can offer that. You're seeing a blurring of the lines of what underwriters did in the past, where before they just basically backed the policies with money and with the capital and went from there, and the agents did all the means of production. Well, agents need to scale. They need help with it. And so you've really seen a transition in the traditional model in the last 5 years.
And that's for sure. I mean, I did write the second thing. The first thing we talked about was volume. I had that written down to make sure we covered it. And then it weaseled its way into staffing, which is the second thing I wrote down, because staffing is definitely, I mean, staffing is the number one issue for us in 2020. Yeah. And the number one.
Where are you finding people other than poaching it from competitors? I mean, do you have a training program, or?
I mean, we spend an absolute fortune on places like Indeed and LinkedIn and places where we can advertise, hey, we need help. We've got, we've dabbled with some recruiting. We've had some limited successes on that. Word of mouth really helps. I mean, there's nothing like telling a customer, hey, if you happen to be at another title company or you use another title company and, there's a person maybe not really digging their job and they want something that, let them know there's a posting or something. I don't typically like to harp on people when they're at their desk, even though all of my competitors seem to love to call our staff right at their desk. I was I'm not going to tell you where I was, but it was in early January. And I was standing at the desk of one of our really key closers. And she said, hang on. And she grabbed her phone and she said, it's blank XYZ title offering me a job again. And I'm like, at your desk at 10 a.m. on a Tuesday?
That's bold.
Who does that?
That is really bold.
Ballsy, yeah. I was like, okay, go ahead. I mean, more power to you if that's the way you do it. But yeah, it's tough to find. I mean, we've also got our central division here, which is just, people that have no idea what title is, whether they're straight out of college or they sort of know because they've worked at a bank or a real estate firm or something. So they kind of know what a deed is and what happens at a closing. They don't know how to do any of it. So we have that training center set up at Nightberry. We probably put 10 people a year through that. And as soon as they seem like they know what they're doing, we deploy them to one of our branches or a different department.
I figured
That's
that
really
would be
helped.
The Haskins Sons jobs program right there.
Well, yeah, I do have one of my sons who graduated with a finance degree, works here now. So that's interesting. He's really enjoying it. He's doing title examinations for some of our Florida stuff. So that's been pretty fun. And guess what? On top of all this, Dave, it's almost the 1-year anniversary that we won't celebrate of the COVID thing that kind of got in the way and still kind of is in the way. This could be our Where Are They Now 1 year later COVID documentary. But you remember, like, when this first happened, I would call you on my way home and saying, hey, we made it to 5 o'clock. Are we going to be in the office tomorrow?
Exactly. Wild. Yeah. It's like, okay, where are we now?
Here we are.
And, talk about milestones. Today is the 15-year anniversary of Agents National Title.
Is it really?
It is.
Well,
yeah.
Congrats. Happy anniversary.
February 24th of 2006, we got our first license.
Good for you, man. Congrats.
Yeah, Missouri. So it's kind of interesting.
Well, very cool. I'm glad, and you're hanging in there because you know the rule. Once you're in title, you can't get out.
Oh, no. Yeah, you're gonna die in it. We'll both be. They'll find us at our desks someday, and that'll be it.
Yeah, once you're in. I love the people that say, like, I'm going to get in the title business and build it up and sell it in 5 years. I'm like, no, you won't.
no, you're not.
You might want to sell it, but I mean, they're going to want you to hang out. And once you're in this business, it's kind of fun. I mean, it's enjoyable unless you really suck at it. Yeah. But if you're good at it and you enjoy it, where are you going to go? I mean, it's a fun, you get challenges every day. That's kind of a neat thing.
Well, I'm looking forward, man, to the in-person meetings. And I think we're getting closer to those. I think NS3 is going to go, and I think Alta 1 is going to go. So
good. That's awesome. Meaning happen.
Like happen. Yeah. Those will be. Yeah. No. NS3 will be in 1st of September in Naples, and then Alta 1's in New Orleans in October. So
hey. First meeting back for most of these people. Let's go to New Orleans.
Yeah. So
no baby steps. We're gonna have that jumping right in.
I think we need a That Floats branded IV bus.
Oh my God.
That we just gouge people for hangover cures.
We'll start taking sponsorships.
Yep.
So all right, Nightberry's in.
Agents National Title's in.
We can't keep sponsoring all of our own stuff.
You know what? I'm still Floaty's shoes have not gotten back to me yet. I've been trying. I hit them up almost weekly to see Flofers. They're Flofers.
Right.
They're floating loafers.
You mean they're like, oh, here's two guys that recorded 30 podcasts and then took a 4-month break.
Exactly.
Let's sponsor them.
Let's sponsor those guys. They're great content drivers.
Let me also ask you, because it's been fun and I'm having a lot of fun with it too, just kind of watching it. My 2 sons are enamored with some of this. How about Bitcoin?
Oh boy.
Remember like 3 years ago or 5 years ago where like people are going to be, and I think one of the title companies somewhere in the US is like, we're going to take Bitcoin for transactions.
Yeah, the first Bitcoin transaction happened.
Yeah. I mean, Bitcoin's it was up to 58,000 last week. It's teetering right at 50 all day today. I mean, so that's interesting. So if you collected Bitcoin for a closing at 2 o'clock today, by 5 o'clock, it could be worth half. So it's
exactly. You may or may not have enough money for it.
Converting that to actual cash. I mean, I think when you say, all right, I'm going to bring $50,000 in Bitcoin to closing today, it sounds good to say, yes, we accept Bitcoin, but really it needs to be, I'm guessing, I'm not a pro at this. I'm guessing you would need to say, take your Bitcoin at the exchange, convert it to cash, and then bring it to closing. So while you might be selling Bitcoin for cash to bring to a closing, that's not
unless the seller is willing to accept Bitcoin based on a strike price to be agreed upon. It'd be, at that point,
whatever the price is at 3 o'clock on February 24th, that's the price that we will accept for this house. 30.
Exactly. Or, hey, we need X amount of Bitcoin, $300,000 worth of Bitcoin, however much it is.
I guess
at that point, you got to deliver it.
Yeah. So, do you screw around at all in the stock market, or at least try to pay half attention to some of that stuff?
Oh yeah.
How fun was the Robinhood?
Oh yeah.
AMC.
Some stonks. Let's get some stonks.
The stonks. That's been a blast. I have a 22-year-old and a 20-year-old and they had a blast. They had a blast dabbling in that. Let's just say
the run up and all of the the requirements on the back end to have the reserves up so you can buy because if you short it, I mean, at some point
you might unlimited loss.
Yeah, you might be left holding the bag if
right.
it doesn't short. So you're keeping paying in, so it can be very dangerous. And it's kind of funny. That's what the hedge fund, some of the investment funds do is they short those and they manipulate the market. Well, when it got turned on them, they didn't like it too much. It's like, well, sorry.
Right.
Live by the sword, die by the sword.
Yeah, that's been wild. It's been fun to watch. So, all right. So we talked about title a little bit, staffing. You mentioned some of the automated search things. Those are pretty interesting. What else? I mean, any fun claims or anything interesting in your world?
Knock on wood, no fun claims. We've just they've just been run of the mill dirt claims. But
you know what's hammering us this past week is the delays of FedEx.
They're awful.
I mean, I can't tell you how many checks I've stroked today on payoff checks still sitting on the tarmac.
Yep.
That we need to add additional per diem or cancel the payoff, wire it out, or cancel the check and wire it out and eat the balance of the per diem. In certain places we have to do that. So it's been a disaster.
Well, Craig, you know what's worse though is what's happening as we speak right now.
What's that?
The Fed wire system's down.
Oh yeah, I did. I saw a note from our wire administrator here. So yeah, that's wild too.
Yeah. Not only that, but like the ACH, a lot of basically all the Fed systems are down right now. So
wild.
If you're trying to close or get money somewhere today, you might have a hard time doing it.
I'm looking over here, David. Honest to God, if I could show you, I would. A text message from my 22-year-old. Just, we have a group chat between me and my three boys. It says, I'm all in on Bitcoin right now. The Federal Reserve is down. How does that even happen?
Yes.
And then my 14-year-old said, it sounds like you're talking in Chinese. I have no idea what you're saying. So the 14-year-old's like, what are you guys talking about with the Bitcoin crap? But yeah, how wild is that?
Yeah. I mean, but that's true. I mean, the Fed wire system is a pretty antiquated one. And I think real-time payment systems, the real-time payment transfers, that'll be the future of the way we transfer money. And that's the Check 21 people put that together. Bank-to-bank transfers 24/7.
Yeah, we get pressure from customers all the time now. Can I just send you the earnest money or the money through Zelle or Venmo or Zachem? Our company uses Zachem for earnest money, and we're dabbling with having people deposit their money ahead of time for our closing through the Zachem app without having to, physically come in and bring checks anymore. Especially if we can do a remote closing on a cash deal or something. So it's been pretty neat. But yeah, that whole getting the money to the title company thing has to be a little bit different than it was in the last, however long the Fed Reserve.
Well, yeah. And unfortunately too, the laws have to keep up, because when you're using an ACH or something like that, that's not good funds in a lot of states. So like Texas, for example.
Correct.
You can't an ACH is not good funds in Texas.
Yeah, so it's interesting. This kind of turned into an Alta plug, because I've seen recently Alta's stepping up its efforts to help each state with kind of a modernizing of the good funds law in those states.
Yep.
I read it actually this morning. Our general counsel asked if we should be looking at it in Wisconsin, since she's the past president of the Title Association in this state,
and a very fine president she was.
Yeah, she did a great job, didn't she? So that was fun. So all right, so this is our podcast back, a little bit of everything.
Yeah.
Maybe we should get some guests on going forward. So
I've got the Harvard law professor teed up. So she, we could get the Harvard real estate law professor to come on here.
We had somebody on Twitter ask
people beating down our door.
Somebody asked a question of us on Twitter, didn't they? Let me look at so the Rob Skidmore.
Yes.
He said, hey guys, interest rates creeping up, inventory low, volume still high. Thank you. We just covered that. COVID-19 default headwinds. We didn't get to default market yet. Stock market peaking out. What direction do you think things will go? Well, geez, I think we just did his. I think we covered that.
I think we just answered his question. Yeah.
The one thing we haven't covered yet, David, which is super near and dear to me and very important to most of us, a lot of us in the title and real estate industry, is defaults. Yeah. I mean, Biden pushed back until, July 1 to do evictions and foreclosures again. So this is like the fifth or sixth time it's been extended. So, I mean, you're talking about I don't even want to say cottage industry, but you're talking about a
No.
sector of the title world that's just dead for a
Yep.
year. And I mean, you talk about pent up demand, probably isn't the right term, but there's something there. I mean, I
Yep.
can't assume that July 1, it's just going to open up and there'll be 50,000 foreclosures filed the first hour, but there's got to be something there. Nothing's happened in a year.
Exactly. It's going to be tough because here's the bad part about this. Yes, you didn't lose your house. Let's say you lost your job or that you weren't able to pay because of COVID and issues like that. You've got to get it current then. And if that's the problem is you might not get kicked out of your house immediately,
Yeah.
but you still might lose it because you have to bring that loan current. So loan mods could be huge to help with that going
Okay. So
forward.
are you saying like if it comes July when the foreclosure eviction moratorium thing expires, assuming that it does June 30th,
Yeah.
and people haven't paid by then, maybe 15 straight months in a row of
Yeah. I mean, how do you
or
catch up
maybe
with?
not paid the full amount over 15
Yeah.
months, skipped one, did a little bit here and there, whatever the scenario is. But
Yep.
you're saying that in July, the lender might say, okay, time for you to, pony up and get caught up.
Yeah. Either we've got to you do a loan mod, which
What do you think they do? Just take the outstanding and just add it to the end or something?
they could, or they just do a refinance with the same
Okay.
lender. I mean, servicing, those servicing providers, they're really going to try and work their portfolios big time because loan mods are going to be big.
Yeah, they don't want them to go to foreclosure if they can
The
work
last
it
thing
out.
a bank wants to do is own a house.
Yeah.
And
Okay.
a lot of these could, here's the other thing. These houses could have a lot of equity in them because those houses also were appreciating while those people were not paying.
Yeah.
So as long as they have a job again or have a source of income, that's
and they might be sitting on equity. Maybe they're still furloughed, or maybe they don't have a job and they won't finance to get the equity out. They'd have to. I mean, they would have to sell essentially.
Yeah, I mean, there will be some people that lose it just because their job's not coming back for whatever reason. They owned a business that failed, a restaurant or something like that didn't come back from COVID, and they're either not making what they did before or they're doing something else. So you could see a lot of loan modifications, but you're not going to see just a wave of foreclosures, I think, like you saw at the end of the last, the crash before, because at that point you didn't have the quality of borrower that was out there before. Loans were much easier to come by. You had B and C paper and the liar loans with those types of,
right. Yeah, different world now.
Yeah. Credit is much harder to come by at this point. There's better, higher loan standards. And I think you're going to see banks doing a lot more workouts. And the other thing is the CFPB, they're going to be watching this like a hawk. So I think a lot of lenders, the last thing they want is a headline that they, let a bunch of people, that they foreclosed on thousands of people because they lost their jobs during COVID and didn't have a ability to do a loan modification.
Yeah, so it'll be wild. You're right. It might spur on a whole different department here within title agencies or direct shops of underwriters. Is that get your loan mod ready. It's not full blown title insurance like you might expect, but it might be. It's something. Better than foreclosure. But
exactly.
And then there will be the foreclosure scenarios too.
Yeah, there will be some. I mean, normally, you always have a certain minimum number of foreclosures that happen in any type of market.
Right. Last question for you. What about vaccines? I think by the end of February, 14-15% of the country is going to be vaccinated. Most of them are the high risk, older folks or, frontline workers in the hospitals and whatnot. I think teachers and all that stuff is in line as well. But, it'll be interesting to see how that works out too.
I think it's gonna be July, August before we get, most of the people vaccinated. I just see how it's rolling out here, and we're just, not getting a huge number very quickly. I mean, we're still on like tier 1. B8, it's so like the teachers here haven't even gotten vaccinated yet.
I don't think here either, but yeah,
the kids need to go back. In fact, one of them just opened the door right here. I'm like, go away, shoo. We're not back in 5 days yet. So we're Charlie's in 4 days, Blair's in 2.
Yeah.
So
that'd be interesting. Maybe we should do an episode on like I don't even know if the rules have been discovered yet, but could you force your frontline closing staff to get vaccinated as a requirement of an employment. I mean, I'm sure there's some legal issues there, but it might be fun to.
You know what? Look, I think we need to have that discussion, because there's been questions. Read some articles on, can you make your employee get a vaccination? Yeah. And yeah, I mean, it's similar to, here we're business. It's we'll see what happens there.
I mean, our company policy right now is I mean, we still have a lot of people working from home. We have most people are in the office now, a lot different than last April, but most of our staff's in the office. Some of our folks have proven that they can do their jobs from home, and we've kind of let it. We're just, we're not screwing it up, or we're not messing with anything that's working right now. But eventually, we're going to have to get back to some type of here's our plan, at Knightberry.
Yep.
And it'll be interesting to figure out how the COVID thing and the vaccination and all that.
We're doing the exact same thing right now on, who do we need in the office for sure, and who could work from home if they want to.
What I learned a lot is, wow, title and closing people can be really resourceful without being at their desks.
Yeah.
I mean, it took a damn pandemic for us to force us to find out how efficient we could be when we're not in the office. I know there are a lot of title agencies that are like, well, most of our staff's always working from home. We haven't been. We've traditionally been in office type people, but boy, it kind of worked. So we'll have to.
I think going forward, we should probably have somebody that's a commercial real estate broker or property manager to talk about how this is going forward, because we're not going to need a lot more space.
I'm going to argue the other side. I can argue either side, I think.
Yeah.
But my thought during midway through the pandemic is we don't need a lot of office space anymore. And then I read, or I met a broker who said, no, actually you're going to need more, because they can't be sitting this close to each other anymore. So you're going to need, even though you only have half your staff, they need to be spread out. You can't have that little break room. Your closing rooms need to be bigger. And I'm like, wait a minute.
Hold on. Yeah. No, that's a ploy.
Wait. So it'll be interesting how this thing shakes out. But all right, man. Well, we're at 40 something minutes, I think. So we'll.
Yeah, our audience has a very short attention span.
Welcome back.
Yes.
Yeah, welcome back. That floaties. We appreciate you hanging in there. Sorry for the long one. If you got suggestions, just hit us up at show@thatfloats.com.
And we're looking forward to seeing you in person, because I have a ton of keychains I got to get rid of.
And look, if you want to be a guest on That Floats, look, what are your qualifications? You just need to have a Zoom camera, and you just need to have to be able to BS like David and I for 30 minutes. That's as simple as that. So
don't be lame.
Yeah, you can just sit here and watch too. That's fine.
Yeah, there we go. Studio audience.
Yeah. So, all right, bud. Well, I'm going to stop this now.